Hello and welcome back. Hope you're good, doing well. So this is going to be the dollar yen setup. Dollar yen is setting up for a breakout opportunity for next leg lower. All right, but before going to look at that, if anyone want to join us looking for training or membership, just simply go to wave-trader.com membership levels and fill that form and send that to me for further information. Okay, now let's look at the previous dollar yen chart. If you remember that we were expecting dollar yen to drop from that previous 152 mark. Okay, so we are having that downtrend. Okay, and the price is just simply falling. Hopefully you have seen those charts. So the current setup is the breakdown. Next leg lower. Okay, this is the next leg lower, which is just simply setting up over there for another leg lower. Okay, so if I'm going to look at the dollar yen chart, if you remember, we were expecting these breakouts. Okay, the chart which I have just shown you, so you can see breakouts over there, updates over there. So these breakouts, okay, so these breakouts, you can see price was just simply nicely setting up, within the moving averages and setting up for next leg lower. Okay, so same happened there, same happened there, and same happened there. It's simply setting up within the moving averages again for another leg lower. Okay, so if I'm gonna click that play button, so we have seen that breakout. I'm gonna click on that button. We have seen that breakout too, and the next correction, which was just forming over there, that breakout too. Okay, this correction broken down to that leg. So updates are there. So we are expecting again breakdown too from here. Okay, so breakdown from breakdown to again from this end, and possible flat formation can happen over there for another leg lower. So we'll see once price going to tag that previous low. Okay, now let's just look at some logical reasons why that can happen, why we can see that move. So next week we are having Fed rate decision on 1st of February. Okay, now Fed is looking to raise the interest rate with another 25 basis point. Okay, the previous is 450. The forecast is the 475. And they are looking to raise the interest rate with another 27 basis point. Okay, means 475 is the expected Fed fund rate on 1st of February. Okay, now let's look at the market. Let's look at the 2-year yield. Okay, so 2-year yield is not pricing in for that. So 2-year yield should above 475. Okay, so 2-year yield should above 475. So what market is expecting that in 2 years time rates gonna fall. So rates not gonna go higher, so they're gonna drop. And but in short term, in the next 3 months, market is expecting that the Fed fund rate is going to be above 475. Okay, that's what Fed is trying to do on 1st of February. They are looking to raise the interest rate up to 475. Okay, that's the short term market expectations. All right, and if we're gonna look at the Fed fund rate, so Fed fund rate is at the 450. Yeah, this is lagging, so it's showing 410. The Fed fund rate is 450. And inflation is significantly dropping. Okay, so it is at the 645. Okay, and within the next couple of months we may see inflation falling below 5. All right, now in 2 years time rates are falling. They are pricing in for a rate cut, because 2-year yield is just simply pricing in for a rate cut. It's not pricing in for a rate hike. It's not rising where the Fed is looking to raise the interest rate. Fed is looking to raise the interest rate up to 475, but 2-year yield is falling. So 3 month is still expecting another hike from the Fed on 1st of February. Okay, so should we follow this? is market is going to follow that, or market is going to follow this? So market has already priced in for that. Okay, for short term, the market gonna price in for this move. All right. So after 1st of February, market gonna start following the 2-year yield or 10-year yield. All right, or what's coming in on on inflation in longer term. So that's telling us that Fed hiking cycle is peaking. Okay, so if I'm going to look at another chart, this chart, okay, so ignore the Bitcoin chart. Let's look at that. Look at this, Fed fund rate and 2-year yield. This is, the orange is Fed fund rate and red is 2-year yield. All right. So in history, when we look at, back in 2000, when 2-year yield dropped below the Fed fund rates, okay, Fed started to cut the rates. Fed never went above, Fed never raised the interest rate. So same happened again in 2007, when 2-year yield dropped below Fed fund rate. What is the Fed fund rate right now? 450. And what it is going to be on 1st of February? 475. And what 2-year yield is right now? 415. Okay, so 2-year yield is significantly below the Fed fund rate. Okay, and highly likely it is not going to break above the Fed fund rate. Okay, it is not going to go above 450 or 475. 450 is right now, and 475 going to be well above the 2-year yields. Okay, so 2-year yield started to fall below the Fed fund rates. Okay, that's what has happened over there in 2007 and 2000, and then again in 2019, yield started to fall below the Fed fund rate. Okay, now it's happening again. This is telling us that this bond market is telling us that the Fed hiking cycle is peaking. Right, so dollar has already priced in for that strength. Okay, this move which we have seen. So dollar was rising for that move. Now hiking cycle is peaking, but we should expect from dollar to go down. All right, go down for another leg lower. Okay, hope that makes sense. Now let's look at the dollar yen. That's the reason dollar is just keep falling against the yen. All right, so it's pricing in for that move. The move is going to come. Okay, so that's the reason all these breakouts were working, breaking down, working, breaking down, working, breaking down, again, working, breakdown, working. So what we should expect dollar yen to do, okay, once Fed gonna raise the interest rate, above 475, at 470 on 1st of February, okay, we should expect dollar to follow the longer, 2-year yields. Okay, so 2-year yields. So means Fed going to be well above the 2-year yields. All right, and market is just simply why 2-year yield is below the Fed fund rate. So the reason is very much simple. The bond market is pricing in for slower growth because of the Fed fund rate at close to 5%. Okay, that's the reason yields are falling. So that's going to cause that another leg lower to happen. So if I'm going to come to the point is going to make it more simple. The point is you are simply looking for a breakout, next opportunity on dollar yen to 125. Okay, we may see this first leg lower all the way back to that previous low, and then again price can go into that flat formation. All right, so you're looking first this breakout trade all the way back to that previous low, and after having that flat, price to continue to keep falling all the way up to 125. Okay, so thank you. We'll see you back again in another analysis. Until then, bye.